This is Matthew with SMB Capital, here to share with you a playbook in NIO, an electric vehicle company. This playbook will be focusing on an opening drive continuation play, which is a trade I've really been trying to build out in my first year here at SMB, as it's been both my most successful and my favorite trade to execute, as it's fast-natured, it's a lot of tape reading, and a lot of quick entries and exits, which usually plays to my strengths. Hope you enjoy listening to the video. If you have any questions, feel free to leave them and we will try to get back to you. Today, we will be looking at a playbook for an opening drive continuation play, which is a trade I've been trying to build out for most of my time at SMB now. This will be a playbook for an opening drive continuation, which is one of my favorite trades that I've been trying to build out here. Trade strategy, you want to make sure you're finding a stock that's really in play, elevated R-vol, anything with fresh news, anything that's breaking out near major technical levels. And then for this trade specifically, you want to have good pre-market levels to really risk off of to make that initial move off the open, so that way you can look for pullbacks and continuation over or under those major levels. In this case, it'll be an opening drive long trade, so we'll be watching an initial breakout and then the first major pullback to get involved long for more continuation after seeing accumulation on the open. So the catalyst, we were trading NIO, the electric vehicle company, in this trade, which also is in the same sector as Tesla, and sometimes they trade in tandem. So the news was NIO had suspended their vehicle production in a manufacturing plant for 5 days because there's been an overall semiconductor shortage for just the industry itself. Tesla also had a negative stock reaction off this news because semiconductor shortage affects them. And then the competition in the EV space is really increasing, and the global chip shortage is making a lot of pressure, a lot of downside pressure on these EV names. So we're watching for a long play on this one in terms of this has been beaten down recently. Maybe this could be a good day for a good buying opportunity, as people that believe in the value of the stock more or just see this as a good technical sell-off and area to risk against. These can all come into play. So the intraday fundamentals, over 5 times R-vol, which is very significant, and significant in a good way, as it can just lead to those outsized moves, giving us greater risk to reward. You can see $58 billion market cap, so this is a substantial company now. They do have a lot of cash behind them. There are a lot of institutions involved. So if they really step in and we see that trending off the open, you can really expect to see more follow through if there's major institutional buying, as well as day trading buying and technical buying off the elevated R-vol and the interest there. So this is what the technical chart looked like coming into the trade. You can see previously I'd been trying for the prior week to consolidate between this 40 to 45 area. And with this negative news pushing the sector and NIO downwards, we pulled into this major 35 level, which you can see is where we really based about a month before this trade, before trying to go higher. So this could be a good area that people are looking at longer term to come in and defend the stock and really buy up that support level. On the hourly, you can see it a little more clearly. It really pulled into that 35 in the pre-market. You can see this is post-market, and then in the pre-market this news really broke, sold off about $3 per share. So we're thinking if it's holding lower off the open, there might be a good chance for a bounce. This is kind of what the 1 minute looked like, and I'm showing you this because I want to compare this 1 minute chart to the 1 minute chart of Tesla and show you how they were also kind of trading similarly in tandem, to give you a little more conviction that there is strength in overall buying, not just in this name, but in other names within the same industry. And that could be a factor of the institutional buying really stepping in and giving that trending move. So you can see now the Tesla 1 minute chart, both had a strong opening drive, a small pullback, some continuation, a pullback, and some continuation. So you can really see just these pullbacks all getting bought up, both in Tesla and in NIO off the open. So pre-market, this is what we're looking at coming into the day before the market's opened. We see we broke through this 37 level. That was like your real post-market inflection. Pulled down and kind of started basing between this like 3460 to like 3480. You can see multiple times. Made a new low here and then failed to hold lower, and that's kind of our low of the morning now that we're going to be watching. And then you can see this 35, like 20 level. We touched it multiple times when trying to hold under. So if we really get momentum and volume through that level, I mean, there's a large gap to fill, a lot of good RR there, even if you're risking to the bottom of the range. But in an opening drive continuation play, you don't even have to give it that large of risk because we're going to buy the first pullback rather than being in on the initial momentum move where it might be a little harder to size.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
This is what the stock looked like on the 1 minute during the intraday first hour from 9:30 to 10:30. And you can see this 35.20 level, the 2 minutes prior to the open, starts to consolidate there. Immediately off the open, breaks out on good volume. And then this first major pullback is where we're going to get long and look to scale out. So the real importance of how you get in here is the tape. This $36 level I'll show on the tape, both on the breakout and on the breakdown, are really important levels. That is both a psychological level and clear action level on the tape. We'll see that on the initial breakout before we break higher, we really stall at this 36. And then on the breakdown as well, we really stall at that 36, break under, and then fail to hold under. So the breakout and the breakdown and how that 36 level reacts is really going to be the key make or break point in the trade. As these opening drive trades are fairly quick, so I'll skip around to the most important parts. Top left chart is the 5-minute chart of NIO, bottom left is the 1 minute, and this bottom center, times and sales, is where we'll be executing on the level 2 in the center and the times and sales to the right of it. So off the open, we got this strong push, and now I'm going to show you how we break above the 36 level and how it kind of needs time. And how it just like breaks through the level even when offers are stacked. So we'll see it's like kind of consolidating higher, just bids stepping up, nothing crazy here. Looking to see more momentum to come in to get really through that 36 level. We'll see on the offer, 114 at 36. That's bigger than anything we've seen all morning. So that could be the first major area they try and hold it down. But if that just breaks through, then this is looking quite strong. And you can see it takes it out and jumps 20 cents instantly and is now still holding higher. So that's a really good that's really good mentally to note, okay, before this could break higher, it needed to take out all those offers at 36. So if it pulls back to 36, we want to see, are people still getting involved there? And we can see here that it's pulling back to 36 and really holding now. It's only getting below it a couple cents. No momentum is coming in below that level. This bottom times and sales, this small one, is block orders, so larger orders. We're not seeing any red block orders. And we're just back over that level quickly. So they really did defend that level after breaking over it. Now I'll skip ahead a bit. We just kind of grind higher. And then I'm going to show us the first major momentum shift after the breakout. And So now we're going to look at the breakdown under 36 and the next pull into 36 to see if we can really hold. So we broke out over 36, held it, made a new high. So this is a traditional opening drive move, and now we want to see if this first pullback can hold that first area it held before breaking out, which in our case is the $36 level. So you often expect it to test under the level before it really holds. It's not just going to hold perfectly the sense. It's kind of a zone. So I'm just seeing that how it reacts under 36. Is it breaking down? Is it getting momentum? And right now the answer is really no. It got into the 70 cents once there, and that was really it. And then these 80s are holding, and now right there makes a new low. This should really break back down into like 35.20 into lows if there's no buying. But we're right back into the 35.80s. I'm thinking about starting in long here if we're reclaiming that 35. You can see my first entry is 35.95, but not my full size, just a feeler. I want to see it keep holding for another, well, 15, 30 seconds, just until that 36 level picks up. I add in, double the size there, at 35.98 before we get over 36. So really just starting to build in here as I'm gaining confidence. I'm just seeing this 36 area get defended. When we get under it, it's not really breaking down. Still just spending time around that area. And then we just kind of get a hold and a slow break higher. I'll show you our high a day break here. Break new high a day. I've sold a fourth of my shares into the high. Looking to hold the last 3/4 into this 37 and like 37.50, 38, like if everything works A+, but realistically I'm going to be getting out over 37 when I see the momentum really shifting. So that will be almost an ATR move. You can see this breakout through high a day isn't the fastest breakout. It's still just bids stepping up slowly. So I want to see that trend continue. And when I kind of see that pattern of breaking out change, then that might be a reason to exit. So I sold some into 37 there, which is a psychological level, and you can see the tape slowing there, and there was an offer holding it there. So getting down to half my shares, knowing that 37 as well was the bottom of that pre-market or post-market channel and support. So if short sellers want to come in from the pre-market that think this news is substantial, that this should be more of a negative catalyst, this could be their area to get involved. So over 37 we stall again. I take out a bit more, getting down to my last fourth as I am seeing that momentum shift now. We're getting back under 37. And then we're going to keep grinding higher, and I am holding my last fourth of shares. I'm going to show you the reason to exit now. And that's because we get a weak new high a day break. So you can see we had a new high, like 37.40. We're pulling back, trying to hold this 37 area to make another new high. And we're going to see how weak this breakout is through a new high. We're in the 30s. You really expect it to go here. It's holding at the top of the range. It's getting pretty extended on the 1 minute. So if this is going to break out, it's kind of needs to get some real confirmation. Offers here stacked at 37.49. They're trying to decrement them. They can't. So that's a clear sign for me that I'm going to be getting ready to exit. And I took off another portion, so now I'm just down to an eighth as I saw those people really come into a new high a day and reject it and hold it down on the offer, and the speed of the breakout was pretty shallow. And now we're going to see my final exit when we break down through this 37 area, which we'd kind of been holding when we saw before we just made that new high a day break. So we'll just skip ahead to there. We're going to see, I'm going to say, okay, if I want to leave on a little portion, probably needs to hold 37 and really keep upward momentum. Otherwise, I'm expecting us to have the chance to pull back to 36.50 or even back to 36. As the volatility comes out of the market, we're seeing moves get retraced a bit more often in the past month or two than we have, say, 4 or 5, 6 months ago. So that's been something to note, and we break under that 37 level. I take my final exit at 36.96, and then I'm just kind of hands off watching how this trends. And like I said, we could see a major pullback, we could see a rebid. Kind of saw a pullback to that high, the 36.50, they rebid, and then it just kind of chops around. So glad not to mess with that, because you can see it does retrace back to the middle of that range. So noticing the momentum shift at the top can really save you an extra half a point on stocks like this that can just have outsized moves to both sides of the range. You got to really stay open-minded to how these breakouts react and where sellers could be stepping in to change that momentum. So this is what the executions looked like on TraderView. As you can see, entry right below that $36 area, which we watched on the breakout and on the pullback. Taking off a fourth into high a day in case we fail to make a new high a day. That's often a pattern you can see. Take off another fourth into the new high a day when it slows. Again, a bit more as it slows, the momentum really comes out. Now, I had a very minor add, a fifth of my regular size, or an eighth of my initial entry, so pretty insignificant, but just trying to think, oh, maybe if it does pull back, hold that 37 area, but then you see it just quickly gives out and I get out. So that's my big point of improvement on this trade, is thankfully the ad was pretty insignificant in terms of P&L, but the principle of that ad and what I'm trying to build out is just not there. There's no reason to be averaging up my price like that. It was just much too aggressive to add up there since the meat of the second move had already been made, because we had the opening drive and then the continuation. So to get even more continuation, it's really going to need some time, and I even said could pull back to that 36.50 area. So if I had done that and waited for the next major breakout, or next major pullback, which happened at this 9.55 area, where we kind of hold this first breakout area, this could have been a great value buying opportunity for a longer term trend on the day, like a 5-minute pullback, and take smaller size. You get risk to this 36 breakout area we saw, or if you want to give it real swing, you could risk just to the low a day and search for 4 or 5 points. So just thinking how I could have stayed involved with the stock, how I could have used my prior tape knowledge from trading it to create more ideas throughout the day. We're seeing more opportunity coming later in the day now, and these morning sessions aren't always the clearest. So really focusing on how I can become more of an all-day trader and really build out my playbook with different types of trades in this lower volatility environment, I think will do me really well in the long run. So just trying to really make my trades more detailed, be more selective in what I'm taking, and hopefully being able to define my criteria better because of that.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.